What's going on, guys? This is Chandler Smith, and today I'm going to settle the debate as to whether 4 units or less or 5 units or more is the better investment. And I promise you, if you stick around till the end of the video, you will know which one of these investments is the best investment for you. So with that being said, let's jump into it. All right, for those of you that don't know me, my name's Chandler Smith. I currently own 99 units of rental real estate, and I've had the opportunity to buy a ton of single family homes, duplexes, fourplexes, an 8plex, a 24plex, a 32plex. And so I have tried all of them when it comes to investing in real estate. And so in this video, I'm gonna help you understand all of the pros and cons to buying 4 units or less or 5 units or more. And the big reason I wanted to do this video is most people that have tried to talk on this topic, they're either the guy that owns nothing but single family homes or the guy that's doing a ton of bigger developments with 20, 30 unit complexes, and they're always fighting about how one is better than the other. And I'll tell you right now, I have both of these investments. And so I'm gonna be able to give you an unbiased opinion when it comes to which one of these investments is better, and specifically which one of them is better for you and your situation. So the first thing I want to talk about is 4 units or less. And the big thing that jumps out when it comes to advantages, when it comes to 4 units or less, is financing. What's so incredible about 4 units or less is you have some awesome financing options. First off, if you're going to live in the property and rent out a portion, or buy it, live in it, and move out of it in a year, you can get financing as low as 3.5% down on a 30-year fixed loan. Now, you're never going to touch anything like that in 5 units or more. It just doesn't happen. There's no package available to be able to do something like that. And even if you're not going to live in it, the fact that you can pick up 4 units or less with a conventional loan on a 30-year fixed mortgage is absolutely incredible. So if you're not living in it, if you are living in it, the loan options are unreal. And at the end of the day, a good loan package is gonna help you in a big way when it comes to your overall return, because if you've got good financing, that can be just as advantageous as a good price on your purchase. The only downside to this financing is you're limited on your scalability. And what I mean by that is once you have 10 personal loans in your name where you're getting a conventional loan, after that you're toast. You can't get any more loans unless you switch over and start getting business loans, which are going to be the same kind of financing you would get for 5 units or more. And a lot of times, because you're dealing with smaller units, they actually view those as a bad thing for a business loan. So a lot of times you're getting worse terms on those smaller units than you would on bigger units. And so for the first 10 properties, financing is incredible. However, you do hit a cap where it becomes not as great because your financing isn't there anymore. The next huge advantage to buying 4 units or less is your barrier to entry. And what I mean by this is, first off, you've got financing where if you're willing to live in one of the units, you can get as low as only 3.5% down on a property. On top of that, because you're buying less units, naturally it costs less money, because usually the expense of the property depends on how many units it has. If you're looking at a 20 unit complex compared to a 2 unit complex, odds are the 2 unit complex is going to be substantially less. And so in this range, not only do you have great financing options, but you can also find deals where it's a lot easier to come up with the cash to be able to get into those deals. The other thing that's really nice about shopping 4 units or less is you're dealing with a lot of inexperienced investors or owners. And what I mean by this is a lot of people that are buying in this range maybe only have 1 to 2 properties, which means they don't really understand the market or investing or any of that stuff. And so it's easy to find these people, especially for sale by owner or even on the MLS, that they're willing to give you a steal on these properties. Now, that can be a huge advantage, but the big negative is with a small barrier to entry and a lot of inexperienced investors and owners, that's going to draw in a lot of investors that do know what they're doing, that are trying to capitalize on those deals. And so when you're shopping the MLS, you're gonna get eaten alive by a bunch of other more experienced people that are shopping these deals. And so if you can become one of those experienced people, it's very easy to find good wedge deals that are going to give you a huge upside. However, if you're just starting to get into it, anytime you've got a small barrier of entry, you're always going to have more competition, which a lot of times can be frustrating when you're trying to find a deal. One of the big pros talked about that kind of pushes people into the bigger properties, the 5 units or more, is the fact that it's substantially more scalable. When you're purchasing 20 units, it's a lot easier to scale your business because you're purchasing 20 units at a time rather than 2 or 3 or 4 units at a time. With that being said, it doesn't mean that you can't scale with 4 units or less. It does take a little more work because you could put in just as much work to try and lock down a fourplex as you could to lock down a 50plex. Either way, you're gonna have to put in your due diligence and everything else. And so scalability wise, it is slower. However, if you get a system in place where you know exactly what you're looking for and you can just be cranking out fourplex after fourplex after fourplex, you can still scale pretty well. And the reality is, you look at financing and after you get through 10 loans, it's a bummer because your financing gets worse, but it's not any worse than the financing you're gonna get with the bigger units. Now, you might have to pay a little bit higher interest rate because a lot of banks or credit unions view 4 units or less as a commercial business loan as a little more risky than some of these bigger projects. And because of that, they charge you a higher interest rate or they're a little finicky on their terms. The reality is your terms are gonna be pretty comparable after those first 10 properties. So if you want to continue to scale and you really lock in on a niche, you can still scale pretty well with these smaller properties. The other small advantage I need to make sure I mention when it comes to 4 units or less is anytime you're dealing with tenants and you have less tenants in one place, that's going to be less stress for you. You're gonna have less issues with tenants arguing or having issues. You're also going to have a smaller target on your back. If you own a 50plex, tenants are gonna think you should have your crap together. If you just own a fourplex, you're just an investor that's getting into things and there's not as high of a bar on the way that you do things. And I've really seen that with my properties. And so that's why 4 units or less is a great place to start. On top of that, I've seen that it's easier to hold tenants long term the less units you have. If you're dealing with a single family home and comparing that to a 32plex or a 50plex, you're going to see that your tenant in that single family home on average is going to stay there a lot longer than someone that's in one of these bigger projects with multiple units. So as you can see, I think there are tons of positives to 4 units or less. And I think if you're starting, you should always start in this range. However, I do believe there are positives when it comes to 5 units or more, or even bigger projects like a 20plex, 30plex plus that make it very advantageous to switch over. Now, as you can see with me, just because I bought these early on and now I've bought more of these lately, it doesn't mean if I see a good deal here with 4 units or less that I don't still buy it. As a matter of fact, I just bought a duplex not too long ago because the numbers worked and I knew it would be a good deal and it didn't seem like a lot of work. However, what makes it worth transitioning over is your scalability and just the excitement behind closing on a deal. When you're looking at one of these bigger projects like a 20plex or the 32plex I just closed on, when you go and you look at a property that's a 32plex, it takes a lot of work, but it doesn't take that much more work than analyzing a fourplex and going through due diligence and everything else. It should take a couple more hours with your inspection and a fine-tuning looking over the numbers and making sure that you understand the property, but the reality is a couple hours more to be able to have 32 units in comparison to 4 units is huge. I mean, it's a huge upside, especially if you're going in and raising rents immediately and instantly adding value and equity. So for example, let's say you go in and you buy a fourplex, and in this fourplex, you just got a killer deal, and to top it off, you're able to raise rents in each unit $250 per unit. So now you've added an additional $1,000 a month in cash flow and probably somewhere between $50,000 and $100,000 in equity in this property, and you are just pumped. You're thinking this is an awesome deal. Well, here's the deal. That's on 4 units. Take that over and imagine putting in not that much more work and doing that in a 32plex, that you're able to raise each unit $250 in rent and that you picked up on a killer deal. You're potentially making $800,000 to $1 million in value add to this property. You're increasing the cash flow by who knows how much. I mean, a freaking ton. If I do the math on that, heck, 250 times 32, $8,000 a month. So what you start to see is these bigger deals are so much more fun because for about the same amount of work, you get a much larger upside. It's also in a situation where you can scale so much faster, and on each deal you do, you're making more. So I would say the biggest advantage to going into 5 units or more is the fact that you're putting in about the same amount of work, but your upside is so much bigger. I mean, when you look at a deal like that, it's going to require a lot more money on the front end. However, it's going to pay you so much more per hour for the time it took to find and put together a deal like that because it's so freaking scalable. I mean, you can buy a ton of units at once, and if you know what you're doing, there is such a ginormous upside to doing that. On top of that, I can tell you, when I did the fourplex deal, I felt like a baller. But when you throw together a 32plex with that large of an upside, you feel like the biggest baller ever. I mean, it is an endorphin rush like nothing you've ever experienced. And I think that's a big reason people transition is they realize when you go into 5 units or more, you get paid more per hour for your time. You're able to scale substantially faster, and it is so fun to put together bigger deals. I mean, for a fourplex, it's hard to get me up in the morning for a fourplex. But if I'm gonna go put together a 50plex, holy cow, I'm gonna be pumped. I'm gonna get up earlier than ever before because putting together a deal like that, especially when your numbers are put together right and you're freaking killing it, I mean, it is just a huge value add deal where you're making in the millions on your return purely by purchasing it properly. There is nothing like that. And I know there are a lot of people saying, Chandler, there has to be a downside to these bigger properties. I mean, they've got to be more work. The numbers have to be more complicated, yada, yada, yada. Here's the deal. Are the numbers a little more complicated? Yeah, but not really. I mean, it's pretty simple to run the numbers on a bigger complex. Now, if you have on-site management that you're taking ownership over, that's a whole different area that I haven't started to go into, and I promise it's more work. However, if it's like the adjustment from 4 units to 5 units and then going from 50 units to 250 units, I would say that this transition from 4 units to 20 units wasn't that bad. So I'm sure in the near future, I'll transition into where I have a management system set up that is in-house, on-site, like some of these bigger complexes have. However, right now, that's not the kind of property I'm talking about, and I personally haven't invested in those. I can just tell you on the 32plex and the 24plex that I've purchased, it wasn't that complicated to work out the numbers. It wasn't that much different from the numbers I'd already worked out on a fourplex or a duplex or a single family home. And so don't get intimidated to make that transition. What should intimidate you to make that transition is the liability behind it. You're dealing with big money at this point. You need to make sure that you're functioning like a business, because if you've got 50 units, 90 units, 150 units, whatever it is, you're going to be held a lot more accountable by not only your tenants, but by everyone else if anything happens wrong. If you're not taking care of these properties properly, you're going to get eaten up a lot more easily because there is a substantially larger target on your back with these properties. Now, not only is there a bigger target, but you're playing with a lot bigger money. I mean, you've got to come up with a very large down payment to purchase some of these bigger properties. You're taking on a huge amount of debt. So you've got to be very confident that you know your numbers and you have done everything perfectly before closing on these deals. Now, there's always going to be a stupid tax. And this is a Matt McKeever phrase, but what a stupid tax is you've got a plan to make mistakes, because you're going to. Anytime you buy a first property, you're going to make mistakes. Anytime you go into these bigger units, you're going to make mistakes, but you've got to work so hard to mitigate those mistakes as much as possible, because you're playing with a much bigger fish here, and because of that, there is a much larger downside. I would definitely say that these properties are higher risk because you've got a lot more skin in the game. Another thing I wanted to share with dealing with these bigger units is an example that Meet Kevin gave me. He said, you've got to decide whether you want to be a cruise ship or a jet boat. Now, when you see a big iceberg 100 yards out, a jet boat isn't worried about that. They can zip, they can jide, they can go right up next to it and change course last minute. If you're a cruise ship, It takes a long time to turn, and what you'll find with these bigger units is you've got to have all of your systems in place, and you've got to have reserves in place so that if crap hits the fan, you're going to be able to just plow through and be okay because you can't shift as quickly as a jet boat can. A good example of this is a place that I actually rented from years back, where it was a big complex. Me and my wife went and rented to stay there for the summer, and we found very quickly that they did not have their crap together. They probably had 200 units, but their office staff was a total mess. Everything was disorganized. There was all kinds of crap going on. And even years down the road, I'm still getting letters from them saying that I owe rent when I know my rent has been paid, and I call them and they're like, oh, we don't know what's going on. We don't know why you're getting that letter, because they're so disorganized. And what I came to find is I am confident that a lot of people that weren't paying or that were paying just weren't getting that communicated properly. They weren't keeping up with their tenants. They probably weren't keeping up with evictions. They probably weren't keeping up with past due and everything else. And what happens there is if you get to be such a big cruise ship and then you don't have a good captain and a good organization in place, you're in a total mess and you're gonna run into that massive iceberg and you're gonna sink. And so it's so important to get all of the proper systems in place for these bigger unit properties, because if your systems aren't in place, you're gonna have some serious issues. All right, so I've talked about 4 units or less, I've talked about 5 units or more. Hopefully the big thing you've gotten out of this is I think they're both great options always. However, they both have their advantages. 4 units or less are awesome for starting out. 5 units or more are incredible for scaling and landing ginormous deals where you get paid a lot more per hour if you're able to put them together. There are risks on both ends, and I'm hoping this video has helped you to decide that investing in real estate is the right answer to this question, because either one is great. However, depending on your situation, hopefully now you can decide which property you should purchase next. Now, if you enjoyed the video, please push the like button, subscribe to the channel, and make sure you hit that little bell so that you can catch all my future videos, where my goal is to help you to create a huge passive income for yourself. And on top of that, if you have more questions and you want to speak with me one-on-one to where I can spend time helping you through whatever investment you're taking on, hop onto my website at chandlerdavidsmith.com. I'd love to set up a call with you to where I can help you to get into that next investment property or answer any questions that you might have. Thanks guys, have a great day.